Hello and welcome to the Wisdom Workshop. Please like the video and subscribe with all notifications turned on so that you won't miss any of our wisdom improving videos. Now let us get into the thick of it. We've finally received some wonderful news. In the United States, inflation has dropped to 8.5%. It's not terrific news. While it's lower than the previous month's 9.1%, it's still a lot. And this is all thanks to the Federal Reserve Chairman Jerome Powell, who continuously told us that inflation isn't a problem while printing trillions of dollars. Month after month, inflation increased. The Federal Reserve Department was well aware that huge inflation was imminent, but chose to keep the people in the dark. Of course, they had a valid reason for doing so. We had COVID-19 that was spreading all over the world, and they couldn't risk allowing people to return to work, so trillions of dollars were printed. However, after Russia attacked Ukraine, the virus vanished from mainstream media, and the United States of America no longer prints trillions of dollars. Consider the number of incidents. Prior to the invasion, there was a considerable surge, and then after the invasion, the number of cases declined dramatically. People have returned to work, and we are no longer concerned about the pandemic as if it were simply another sickness like influenza. Now, I'm neither a conspiracy theorist nor a Trump supporter, but they made such a huge deal out of Trump treating COVID-19 like the flu. We would not have had such high inflation if the government had opted to open the nation and put the economy back to work instead of printing trillions of dollars. Whatever occurred, it is what it is. Therefore, the question we should be asking is, how can you benefit from inflation? We must adapt to the situation and learn how to profit from the catastrophe. There are millions of perspectives and specialists on the internet, but I recommend we follow the advice of Warren Buffett, the greatest investor of all time. This is not the first time the country has faced a disaster, and it will not be the last. Warren Buffett is nearly a century-year-old, so he has lived through several inflationary eras. So let us investigate Warren Buffett's approach for making millions of dollars in the face of such severe inflation. Warren Buffett's first piece of advice is to be exceptionally good at something. That doesn't seem like the kind of counsel you want to hear. You presumably expected something along the lines of investing in this firm or purchasing that stock. However, most individuals don't have the type of money to invest and are prepared to enjoy how millions or even hundreds of thousands of dollars would fill their bank accounts. But here's what most people are excellent at: exchanging their time for money. We've been taught this since elementary school. Of course, that's not the ideal method to generate money because your time is limited. However, your time is the only thing you have complete control over, and no one can take it away from you. So the greatest approach to protect yourself from inflation is to invest in yourself and flourish at something. It doesn't matter if you're a physician, an architect, or a teacher, because no matter what situation we're in, even if it is inflationary, there will always be a need for basic skills. People aren't gonna quit coming to physicians because it's too expensive. Consumers will go to physicians regardless of price, and during times of severe inflation, people with talents may simply raise their fees without impacting demand too much, and the only issue is that you should do this before inflation occurs. Which implies it's a little late now, given inflation has been around for almost a year and has recently reached nearly double digits. So if you want to be prepared for the next inflation, consider investing in yourself, in your abilities, and in becoming an expert of your trade. Be the finest doctor, professor, or attorney you could be. If you've already done that, Warren Buffett has some advice for you. The second best defense is a fantastic business, which implies a firm whose products are in high demand even if the company has to raise prices. No matter how much we despise inflation, it is a necessary component of the economic cycle. It's gonna occur whether you like it or not. Another reality is that not all enterprises will survive. Many firms will suffer if they start raising prices, and if they don't, their earnings will decline since the cost of their goods or services will increase due to inflation. So which businesses can tolerate inflation? Buffett stated in a 1981 letter to shareholders that companies that tend to withstand an inflationary environment must have two characteristics. One, an ability to increase prices rather easily even though supply is stagnant and potential is not fully utilized, without fear of significant loss of either market share or unit volume, and 2, an ability to accommodate large dollar volume increases in business, often produced more by inflation than by real growth, with only minor additional investment of capital. He's basically stating that if a company sells a need like food, it may raise its cost and people would still buy it. It's not going to make a difference. Second, the company does not require further large capital investments to grow or adapt to changing conditions. For example, in the railway industry, huge upfront cash is required to establish the railway. However, supplying an extra customer will not cost anything more if it is an online business like what Apple is doing with the App Store. An extra user will not cost Apple anything, even if an additional million users will not necessitate another considerable investment in the App Store to handle. So which firms did Buffett invest in during the present inflationary period? Buffett did not specify everything he purchased, but he did address many highlights, including increasing Berkshire's holding, his own personal firm, in oil giant Chevron to $26 billion, up from $4.5 billion at the start of the year, making it one of the conglomerate's 4 largest assets. Berkshire also spent billions in the first half of March, buying up 14% of Occidental Petroleum's shares and adding to its already large portfolio in Apple stock. Oil prices are rising for the reasons discussed earlier, and no one is going to quit using oil. Regardless of price, demand will continue to rise, and at the end of the day, the increase in oil costs will simply have an impact on everything else. That expense will be passed on to consumers. Second, Apple is the sort of firm that has made technology a must. People are still buying iPhones and MacBooks despite the fact that we are in the midst of a major catastrophe. iPhones are a vital component of the global economy. People have created entire industries around them. People may quit purchasing automobiles, but not iPhones or MacBooks. They're not canceling their Apple membership. This is a new reality that they have created, which is why, despite Buffett's dislike of technology businesses, he willingly invests in Apple and his investment has paid out handsomely. Even if you know this information, you won't be able to do anything about it. And what are your odds of selecting a fantastic company? Even if these are vital features, you must still examine their financial accounts to ensure that they have adequate cash, are not drenched in debt, have high profit margins, are not one step away from bankruptcy, management is prudent, and the firm has a visionary board. I mean, these are all factors that you look at to ensure that the firm in which you're investing in is a good one. However, most people are incapable of doing so. It's not meant as an offense, it's just the truth since everyone is focused on perfecting their own trade. Most folks just don't have the time to learn how to invest. That is why here's what Buffett offers as words of wisdom for everyone. I don't think the average person can pick stocks, he says, recommending the S&P 500 index fund as something people should have for a long time. We have enough evidence to think that the S&P 500 has produced excellent long-term returns. It has beaten the majority of hedge funds and has shown to be an excellent inflation hedge. But you must be patient, because while the S&P 500 has performed poorly in the short term, over the long run, at least 10 years if not longer, the index has shown to return roughly 10% yearly. So if you're not interested in stocks or believe you're a better investor than Warren Buffett, but your portfolio has suffered as a result of Federal Reserve rate rises, you're far better off listening to Warren Buffett and just investing in an index fund. To be honest, even if I choose particular stocks after extensive analysis, I still follow this advice. And if you want to become a better trader during these times of inflation, then you too should listen to the advice of the major players in trading. Thank you so much for watching the video. Please hit that like button and subscribe with all notifications turned on so that you can be informed about the upcoming videos earlier than others.